Vishy, the bank has been talking about that they don't want to go into wholesale deposits, and the reason being that the interest rate cycle is about to turn. We heard yesterday Dinesh Khera talking about that the first cut may happen between October December. That means that they're going to go slow for the entire fiscal FY25, and that also means that either they have to go for an equity raise or shore up their capital so that they can meet the guidance of the growth, right?
Yeah, I mean, ideally yes, because the only way to fund that kind of growth, Sajeet, is either through equity or through actual liquidity that is there in the banking system. Now, if the liquidity is going to be tight for the time being, we don't, by the way, do not know what is going to happen before the financial year ends, because the budget is coming up next month. We may see higher government spending, because this is being an election year. You may see slightly higher government spending, which basically means that the system may get a liquidity boost. But that, at this point in time, is an uncertain future. The way the bank has been guiding to the future, it does seem that it's going to be a tough challenge to manage that liquidity base. And if that is going to be a question, then to fund that growth, you need the capital to come into the bank.
Right. That, of course, is largely what Vishy and Sajeet have been discussing. Mr. Sajeet, back to you on more on HDFC Bank. What are the positions? Why FPI is selling this one? I guess you've got some more details of what's happening on the stock.
So let's take a look at the intensity of sale that happened yesterday, right, on HDFC Bank counter. The average traded volume or traded value was somewhere around 2,600 crores on a daily basis for the last 1 year. Now, on Jan 17th, we saw a total turnover of 13,000 crores, which is nearly 5 times the average daily traded turnover. Delivery was nearly 60%. If you put it into context for the entire Nifty Bank, because we saw good action coming in Nifty Bank there, Nifty Bank delivery total was nearly 10% of the total turnover of the market. Total turnover of the market between NSE and BSE was 1.4 lakh crores, and Nifty Bank itself had 14,800 crores of delivery, which across 12 banking stocks. That brings us to the big question of what was the kind of total delivery happening in some of the key stocks there. 8,400 crores of delivery happening on HDFC Bank alone, nearly 1,800 in SSE Bank, and Axis had 1,200. All of them with high delivery percentages, and that's what we saw in the FI numbers that came in yesterday, provisional numbers, where the net sale was more than 10,000 odd crores. A large chunk of that coming from HDFC Bank, where 8,400 crores of delivery happened there. So why are FIs selling? The first thing is that the bank, it seems, has failed to guide the street on growth and the merger complications, basically, or the challenges which are coming in. It's not been clear in its communication to the street or to the brokerages or to the fund managers or to the institutions, and that is now playing out for the last couple of quarters. There is a sacrifice on growth and margin, which bank is talking about, which basically means that this bank is going to be derated from here on, and because the institutions were holding on to HDFC Bank despite the fact that there is a negative news or underperformance coming in the last couple of quarters. In the last 1 year, it has fallen by 6% compared to the index. It is basically primarily because they had consistent growth in terms of top line and bottom line and good margins. Now that is going to be a question mark for all the institutions going forward. Also, the final thing which I want to talk about is the HDFC Bank in the model portfolios of all funds. Whether or not it was performing or not, it was part of it. Now that there is issue in it, it's dragging the entire returns for the funds, and that's the reason why we saw some selling happening. If you look at the ADR premium, how it moved yesterday, it's come down, it become flat. It's almost, if you look at here, it's almost at 0.2%, which basically means that there has been a lot of selling in the ADR market. The premium was always because there was a scarcity and liquidity, in the US market. 13.5% of HDFC Bank's equity is in the form of ADRs in the US market, and there the premium has always been higher. Now it has fallen down to 0.2%, which is at par with the local share price. So there is going to be some pressure on HDFC Bank today itself, but Whether it's going to be to the extent that we saw yesterday is going to be, it's a question mark here. The bank will see some kind of correction as we see in trade today because of the Nifty expiry there, but I don't think it's going to be to the extent that we saw yesterday.